Hello and welcome to the webinar. I think we call it day trading. What do we call it? Day trading using volume price analysis and the Ninja Trader quantum indicators. So again, thank you for your patience. But before we start, as you know, this can be a very risky business. So please don't even think of using money that you cannot afford to lose. And in the webinar, it will be myself, Anna, and accompanied by my husband, David, who is just looking at me from over the other side of the desk. And in this webinar, in this session, as we always do in all our webinars, we will be looking at the markets through the prism of volume price analysis, and we'll also be looking at the markets through their the different relationships, the way all the capital markets are connected. This actually is the slide from our Forex program, where we have Forex in the middle, have bonds, equities and commodities. But in this session, we'll be looking at the indices. And I think we're going to have a look, we're going to look at some commodities, David, as well. We've been looking at oil recently, and I also want to have a look at gold. But anyway, the way we approach the markets, as I said, from a technical analysis point of view, using volume and price to give us an idea of not only what is happening on the chart, but more importantly, where it is going next. And then we also place what we see on the chart in the context of the broader market in terms of sentiment. So I'm just going to click that off and move it over. There we are, just move it over there. And in fact, what I've got up here at the moment is the YM. This is actually, of all the indices, this is the one that, well, certainly David it's your favourite, isn't it, Doreen? Yeah, it's his favourite. This is the one he's traded the most of the three, the ES and the NQ. It's $5 a point, isn't it? So it's not too scary. It's very measured. It's certainly not as volatile as the S&P, the ES, which is the E-mini future for the S&P 500. And if we were asked, well, of the indices, which should you start with? I think I would not hesitate and say certainly the YM is one that you can certainly cut your teeth on, as it were. I said earlier we have a look at sentiment. And where are we here? Where are we here? I've lost it. Here we are. Just bring it over here. I think I introduced this to you a few weeks ago, but if it's your first time here, this is a really nice resource. It was introduced, I was introduced to it by a fellow trader, and it's called the Fear and Greed Index. And you can, if you refresh it, just hit the refresh button, that little dial actually goes up and down. In fact, before I refreshed it, it was at 62, and you can see now it's moved to 72, and that's because at the open, the indices have climbed higher. And it's just a way of trying to decide what is market sentiment at the moment, and it certainly seems to be a risk on. In other words, traders are happy to, they're happy, they want to take on more risk. A quick look at investing.com, and we can see where the VIX is. The VIX is back under 14. It's coming up at 13.6. We can see the Dow is up. The S&P is not up, has a little bit of a pullback. That's the NASDAQ, that's the cash. David is pointing, I think red is his favorite color again. We did actually say, if you were with us last time, we looked at the monthly charts, and when markets are climbing higher and they're approaching key levels, in the sense that they are coming up to new highs, everyone gets terribly worried. It's what we call the climbing the wall of worry, which is why markets go up much more slowly than they go down. And I think Donald has also sent out one of his famous tweets this morning saying, well, US economy is doing absolutely brilliantly, and a little teaser that things are going well with the negotiations with China, which is really what the market is now waiting for, for a kind of medium to longer term view of whether the move higher in the indices following the fall last year is actually going to continue. We had the correction, and now things are looking bright. Everything is rosy in the garden, but we know that is not actually the case, and it will be reflected on the charts through the prism of price and volume. So is it just another you know, another short squeeze? Is it just is it all a fake? Well, we'll have to wait and see. And I have to say, from when you look at a chart, you'll have all this information behind you. You'll have read the news. You'll have had you know, you probably have a feed coming on from your broker giving you all the latest headlines. And sometimes, you know, you can kind of get caught up in the headlines, and it's so important that you become sort of semi-detached from what you hear and what you actually see, and you just trade what you see. And if it looks like a sell, it is a sell. If it's a buy, it's a buy. And that is often in complete contradiction to what the headlines may be screaming at that particular time. With regard to fundamental news, there's nothing. We've got a gas storage and nothing, and it's really because the market is now waiting for the NFP data, which is not until tomorrow. It's also caused a huge problem in the forex market because markets have been completely flat. I'm going to stop there. And I'm going to pass over to David, give him a chance to say something. I'll have a quick look at my YM and then I'll pass back to him.
Hi everyone, thanks darling, and excuse me, a very warm welcome to you all. Good to see you. Absolutely appalling weather here, so I hope the weather's better where you are. If this is your first time coming along, great to have you on board today. I sound like an airline captain. That sounds brilliant. I do sound like an airborne. Yes, and I can do the safety procedures. It's good to have you with us, and I have to say it's been a terrific move already. We had a nice up move, and then there was a lot of volume came in, signaling the reversal, which is underway at the moment. As Anna said, red's my favourite colour, so I just love seeing price waterfalls and jumping in there and just making money fast. We're on NinjaTrader 8, Anna's on NinjaTrader 7. If you have any questions, just drop them in the chat box. Happy to answer them there. Or if they're longer questions, we'll answer them on air for you. Just going to flip back to Anna and keep an eye on what's going on.
Thank you, darling. Right, this is we have the open that we had almost an hour ago now, and as usual, preceded by an awful lot of congestion, consolidation, really in a tight range. We can see here this the resistance at 26,250, which is this red hatched line from the accumulation and distribution indicator. To the downside here, which is trading in, and that's 26 to really, is it 10 points, David? It was trading in about a 10-point range, which is really horrible. But you know, this was Globex. Although Globex, I have to say, can often deliver some really, really nice trades. We had the open, immediately we had a volatility candle. The next candle, when it opened, retraced to within the spread of the candle, more volatility, more volume coming in, and we had a third candle, which is actually quite, do you want to say something?
Yeah, we've actually got divergence, which is quite unusual.
Oh, but what you're seeing on the ES?
You're seeing on the YM.
Yeah, well, I'm, as I said, on the YM. David said we've usually the indices move pretty much in lockstep. Certainly the ES and the NQ do. Sometimes the YM can diverge. It's only 30 stocks in the Dow. Don't forget. You know, the other two indices are a better, reflect. You know, the US economy. These are the sort of blue chip stocks, if you like. But however, they're perfectly tradable in this futures contract. So what we have here, then we had a third candle, which is, you know, does happen, unusual. Again, you can see here, it always retraces to within the spread of the candle, but again, pushed higher. And the next candle, there was weakness came in. There was a lot of volume underneath it, but the momentum that was that these three candles had behind them has really been sufficient. The buyers have really, you know, pushed on, and where have they pushed on to? They've really pushed back to the volume point of control, which is at 26,354. But that is a really, really nice move. We say with volatility, you do have the reaction, you do have the move back into the spread of the candle, and then what you have to wait for is either if the move is going to carry on higher, a break of the high, or if it's in the other direction, of the low. And that is perfect. There's a perfectly valid way of looking at volatility candles. Tends to happen that, you know, when that happens, it simply congests into the spread of the candle. This is just the 3-minute chart. You always look at this, or I certainly do, with a non-time based chart. That is the move that was seen on the Renko. This is all the horrible choppy price action that that preceded it. This is the move that we've seen, slam bang into the volume point of control. Looks like it's it may be moving sideways and possibly catching up with the other two indices. Let me just move that onto a higher time frame. Let's just go on for 10 minutes so we see if we've got some other levels that we need to be aware of. Yeah, in fact, the 10-minute candle, again, I don't have the opportunity to show you all my screens and all their different time frames because of the constraints of the webinar program. But this again, there's a fantastic move higher, but straight into the spread of the candle. It has broken up above it, but what we have here, we have a shooting star. Not a lot of volume, but it is in proportion to that candle. Don't forget, this volume under here at the open. There's it's like pent up energy that rushes into the market simply at, you see, at the open. Let me just take up a third time frame because you always like to use 3. I've got 10. Let's go up to 30, which is 3 times. And in fact, the 30 is really the volatility candle, and the price action is more in line with what we expect when we have a trigger of volatility, where we have the retrace and retreat back into the spread of the candle. And now, if you were looking at this on your screens, this is what we'd suggest. You'd have these 3 time frames up. Yes, you would see on the 3-minute chart price just motoring up, benefiting from the momentum that has come into the market at the open. But when you benchmark it against something like the 30-minute, at some point, the reaction would be back into the spread of the candle and possibly the potential for a reversal. So that's the YM. The Renko would also pick that up. At the moment, the trend monitor is still blue. It's in congestion. We would have to wait. If this was a tradable reversal, we want to see all the trend dots red, and we actually want to see that move into bright red. You do get these in between colors, but for a potential entry, that's what you need to see lining up. Right, I'm just going to pass over to David. Oh my goodness, we've got a big storm outside the window. Right, I will pass over to David.
If you can hear rain beating on the window, that tells you how hard it is. You may or may not be able to hear that, but it's absolutely lashing down right now. There's a fantastic move going on, and what's really interesting about it is that, first of all, it's just a great money-making opportunity. If you can't make money when the market's moving like this, then it's a bit of an issue, because it's really a no-brainer right now. Everything is flashing bearish. I'm on the tick charts. The reason I started on the tick charts, I just wanted to show you this on the 5-minute. This was the open. This is where we are. This is 14:30. This is UK time. That's when US markets open for us. We're now back on daylight saving, so we're back in alignment, so to speak. The volume comes in. We get a ton of volumes, what we always expect to see. The first 2 candles are okay. They're aligned. The volume is here and here, in case you can't see it against the green background. Then we start to see some indecision coming in on this one. Again, decent volume, but indecision. Then we get a further signal of weakness. This is where the weakness really starts. Lots of volume, pretty much aligned with the open. Weakness, 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 indecision, bang, and we're off. That's the sort of classic candle pattern you're looking for. You're looking for those VPA signals that tell you loud and clear that this market is looking either very weak or very strong, very fragile, or very strong in terms of momentum. And that is what you're looking for. You're looking for the entry. Then it's a question of where you want to get in. At what point do you want to jump in? Do you want to get in early? Are you quite happy taking a risk up in this region? Or are you going to wait until the trend's getting underway? And once it gets underway and you start to see signals like this where the market's tried to rally, volume under that one is not terribly high. I'd like to see that a lot higher if it's going to crash further. But if that volume profile there, for example, that's a nice widespread down candle, no wicks, ton of volume, very bearish. I'd like to see higher volume under this if I was going to use it as a re-entry, but nevertheless, that's a sure sign of further weakness to come. The market's tried to rally, fallen back, exhausted, bang, on off we go down the next leg. And that's really how it's done. And you can see there, you can understand why red is my favorite color. I get quite excited when I see red screens. Everyone else throws their hands up in horror, no doubt, particularly if they're equity traders or investors. I don't. I just think it's wonderful. It's just making money quickly. You do see this in the upside, but when it's to the downside, boy, oh boy, it does move quickly and the points rack up equally fast. We've got the trend monitors red on all three. Red here, red down here. And it's also reflected on the Renko, using the Renko alongside. Bear in mind, these bricks may not look like much, but when you consider we've gone from 75.90 down to, let's move the chat box. Oops, sorry. Let's move that out the way. Out the way. There you go. Down to 75.41. So, that's 40, 50 points there already and counting and moving pretty swiftly as well. And again, the trend monitors on that one, as you would expect with the trend dots. That's on the tick charts, which will reveal raw momentum. As you can see, you get a sense of speed. That's why we like trading tick charts. That's why we like the Renko, because they are independent of time. You will not see that on a time chart because the time chart is governed by just that, by the time that you set. On a tick chart or a Renko chart, these are configured according to the tick speedometer over here. This is on 987. I could set it to 1129, but that will change frequently. So I've got this on 987. This is 987 tick. So every time there are 987 ticks go through the market, then the candle will form. And that is completely independent of time. It doesn't matter whether that takes a nanosecond, microsecond, millisecond, whatever it may be. That's the nature of using non-time-based charts. To go back to what I said when Anna was speaking about the divergence, is interesting because if I go over to the workspace with the three of them, top line is on the daily. So you've got the daily YM left, you've got the ES in the middle and the NQ on the right. Down on the bottom frames, you've got 5-minute time frames of the YM, the ES, and the NQ. And what was interesting, when Anna was talking, the YM was up here somewhere. It was trying to push higher whilst all these were red. So this was green, albeit not very wide candle, but nevertheless it was green. The market was trying to push up, whereas these were heading in the opposite direction. They were both red, as with the NQ. It had quite a widespread candle on the NQ. And what's interesting about that is if you're trading the YM in isolation, and you're not following what's going on in the sister indices, then it's just free information for you because, as I've said many times before, if all three are going in the same direction, terrific. It gives you a different view of volume price analysis perspectives. It gives you a different view of support levels, resistance levels, and everything else. And obviously the tools and indicators in terms of price support, in terms of the trend monitor, what's going on. But in addition to that, what it also gives you is a perspective on whether there is any divergence, and indeed in this case there was. But what was interesting is as this was trying to push up, these were falling quite heavily. So if you're over here not knowing that, the question you've got to ask yourself is this: is the YM leading these two, or are these two leading the YM? And I can't say categorically for sure, but what I would suggest is that if you've got two on one, then the likelihood is that these two are going to carry more weight than the YM, unless there is a particular reason for the YM divergence, which could have been driven by one of the very large blue chip stocks, possibly. We've seen divergence over the last few weeks through the tragic circumstances of Boeing and the crashes there. That has certainly affected it, and on those days when that was pretty raw news, we did see divergence in terms of the YM falling and the other two indices rising. But there was a clear reason for that. Today, I don't think there is a clear reason for it. So it's a question of being aware of it and waiting for the opportunities to come along. Just head back onto the ticks again. Just pop that down there. Starting to see a bit of a reversal coming in. If we go down, look at the, let's have a look at the 3 minute. This is the 3 minute on the tick speed. Got some decent volume coming in under that one, so we've got a bit of indecision on that particular candle. Wouldn't say it's strong buying, but certainly some indecision coming in. So, you know, you're seeing that volume, you're seeing that kind of price profile. It's no great surprise to see the market rally a little bit. Let's just see what's going on in terms of one similar sort of thing there. Nice volume under this candle, little bit of buying coming in under this candle, sort of continued on under that one. Volume's dropping a little bit on the time frame there. Down onto the 5 minutes. Nice volume under this candle, and we'll see how this candle closes. For further downwards momentum, ideally what we want to see something like this with a wick on the top, a rallying wick and lots of volume, and the market not going anywhere. Alternatively, we might see a bullish engulfing candle formation, which might signal the portent of a possible reversal. Over onto the Renko, seeing that minor rally in the reversal here. No change in the trend monitor, but we've got a change in the trend dots. You can see here, we've gone from red, we didn't even go into grey, we've actually gone to blue. Whether that continues, we'll have to wait and see, but that's the difference between the trend dots and the trend monitor. The trend dots are very close to the price action. The trend monitor takes a more considered view of price action. It takes a longer term perspective, if you will, all things being relative in terms of the term time. Let's just go back onto the time-based. Put that out of the way. And you can see I've got this on 2 minutes. This is on 2, 5, and 10, just to remind you across the top here. Down the bottom here, I've got the 30 minute. I've got the Renko running here. And over on the right here, I've got the daily. And if I just flick open the daily, which just gives us context, that's what we're trading. We're trading in a pretty narrow range. That's not to say we haven't had an opportunity to make money. We have. Just widen that up for you, make it a little bit easier to see. And this has been the extended rally off the major reversal of early in the, where was it? There we go, right back there. There we are. That's the reversal. And it's been pretty consistent. And now what we're doing is we are starting to approach, and this is why the markets are getting pretty nervous. Certainly for the NQ, we're starting to approach new high ground over here. And at that point, the fear index and everything else will start to kick in, as indeed with the VIX. But that's where we are for the time being. We had a 2-bar reversal there. Market sold off a little bit, but we still got this bullish uptrend. Not a flicker of change on the trend monitor. You wouldn't expect to see it anyway.
Actually, I didn't realise that I have got the news up. Apparently, the Italians have been just given a growth downgrade.
Apparently the Italians have been given a growth downgrade. Yeah, that's no surprise. Europe is not quite in recession, but certainly with the German data, and Italy is, I believe, and Spain. Okay, what's going on here? Well, let's look at the 10 minutes. Got a nice deep hammer candle coming in here, lots of volume. So what are we expecting? We're expecting a reversal. We're looking for the reversal because we're seeing it here. That's on 10. We've got a 2-bar on 5. So basically what you're seeing here is that those two candles are that candle. And you can do that in your head. It's very easy to do that on any time frame. It's not so easy to add groups of candles together, which is another reason for using multiple time frames. But when you've got a 2-candle scenario like that one, it's so simple just to do that in your head, and that's it. It's a hammer candle. You can see it, and you just check out the volume on the slower time frame. So we're expecting to see a bounce. You can see it. It's even shaped up here. You can see the buying, not so much there, but certainly on these two candles. You've got decent volume under here. Remember, all we're looking at here is this slice of volume activity. We can't compare it with here because this is Globex running through to 1430. That's when we get the physical and the cash market open at the same time, running in parallel. Now we're in parallel, so we can compare these volumes through here. So we know this volume here is pretty decent under here. We know there's a decent amount of buying in that particular candle and a decent amount of buying in that candle. Why? Because the volume here is pretty much the same as these guys over here, which is the start of the session. So we know this is serious volume. We've got a serious reversal underway, and now we're looking to see how far we can go in the opposite direction. And that's what it comes down to. You've got a nice widespread candle up to start, good volume under it, no wicks. That's pretty strong signal that this is now a bullish move to the upside. Where is this heading to? What are the barriers? You know, where is this going to run out of steam potentially? First of all, you've got some very strong price resistance overhead at this level, this blue line and the red level. These are off the accumulation distribution indicator, which works off price-based support and resistance. Where these levels are tested, retested multiple times, the indicator paints these on the chart, tells you how strong they are, because the wider that line, you probably can't see it, but actually behind the volume histogram, it actually details the number of times that particular level of price has been tested or retested. The wider these lines, the stronger that level will be. You can see this level up here. That's a pretty weak level. Nevertheless, it's a level. But then these two guys here are very, very strong. So if you're trading this to the upside now, we're trading the reversal. Where are we going to run into difficulty? We've got a low volume node here immediately below this price region. So this is fine from a volume perspective. From a price perspective, we should certainly expect, you only have to look at the left of the chart, look how strong it is over here. You should expect the market to pause here. If you've taken some money out of here, you might well cash in here because you don't want to sit through a buffering of congestion through this region, because it's got to get through that. And almost immediately afterwards, it's got to get through the next level. If it gets through there, it's got to climb through some decent volume, and then we get back to the volume point of control where further congestion awaits. So from a trading perspective, that's what you're looking at. You're waiting for this. If it gets to, where are we, 68, something like that, then that's probably where it's going to hit some congestion, certainly through 70 and up to 72. So anywhere in there is going to be congestion. Not going to get through there terribly easily, unless it's driven with some extreme volume. But it will certainly, I would guess it will congest at the very least. Don't think it's going to go through there fast. Down onto the 30. That really just reflects what we're seeing. And of course, what it also reflects is the volatility indicator. This is the typical price action that you see at the start of most of these sessions. It's very unusual to see a nice clean open where the market takes off in a nice trend. It's nice and steady. Even if you're trading the YM, you get this volatility whipsaw. We get the volatility to the upside. Traders think the market's going up, so they get trapped to the upside. Then we get another one to the downside, very strong, nice big widespread down candle. Not so much volume under it. The volume's fallen away, but then you expect that anyway. And again, you've got volatility, so we're expecting the market to congest. That's what we're seeing. That's what we're seeing right now. Whereas the heading, we got the volume point of control up here. So it's you know, again, it's just reinforcing all the fragments of information which go to make up the puzzle as to where to get in, how long to stay in, and when you want to get out. And that all that information comes off the chart and the indicators. Just go back to this one again. And really just reinforcing what I was saying about this rally. We had the volatility indicator anyway on the first candle, so we're kind of expecting certainly some congestion to build. Then we get the, this was the 2 candles, 2 5-minute candles in here. So again, we've got further confirmation this market is looking a little bit weak. Just keeping my eye on that because it's just coming up to this region here. Let's see if it goes through there or not. That's where my cursor is. The blue level is just literally below here. Certainly testing it at any rate. Just peeking over the top. And remember, these levels are absolutely precise. This is not we're not laying on areas of price support and price resistance which are wide, huge, great, I'm sure you've seen them, great sort of levels of swathes of price action. These are absolutely pinpoint. So the mere fact that they work so well is testament to the indicator that really does give you a pinpoint appreciation of where these levels sit. That's not to say they are rods of steel. They're not. They're not brick walls that you can expect market to just run into and rebound off. But nevertheless, they are very strong. There are lots of orders sitting there. There's been congestion there in the past. There's lots of price action that's got to be battled through. And if it is to be battled through, then it's going to take effort. It's going to take volume. What you can also see on the trend monitor is it's just starting to transition now. And what you always see in terms of that transitional changes, and this applies to anything, it will always happen in the fastest time frame. So it will start in the 2 minute or the 1 minute or the 30-second, whatever it is, and then it will filter its way through across this lot up onto the into the slower time frames. If it is a true change in trend, what we've seen here is a change in trend. We've gone from primary bearish, now we're into primary bullish. It's pretty much a V-shaped trend. It came off the 2 minute. It's starting to shape up. Now we've got a trend monitor transition to blue. Nothing on here at the moment and nothing on here either. But if this is going to extend longer term, then it will transition further on the other charts, and they will transition too. You can see here on the 5 minute, slightly different composition, but nevertheless, you've got this very, very deep level here of price resistance in red, acting to prevent the market moving through there very quickly. You can see it try to get through. It hasn't. It hasn't bounced off it yet because we're just building this candle. But nevertheless, it just gives you a perspective on why things happen on the chart. The constant question is, why did it happen? And if you understand the indicators and you use multiple time frames, then the answer will be there somewhere. You just have to find it. But it will probably be on a different chart that you're not looking at, which is a reason you need multiple monitors for this business. Because there's an awful lot of information you need to have up. Seems to have managed to creep through that level. And of course, once it's through that level, it's very tight. If it does get through that level, then that is going to act as support, as indeed will the next one, in terms of a further leg up in this move. And at that point, you might think, okay, terrific, I've got these two very strong support platforms in place now. Once I get through maybe 75, 76, 77 above this lot, then you've got a decent run of maybe 10 points up towards the next level where you are going to hit resistance in the volume point of control. And this is also a nice example of how, as an index trader or indeed any trader, you've got to be light on your feet. You've got to be prepared to reverse. On the one hand, we had a nice move lower, lots of money to be made in there. Now we're trading the upside on the bullish, which is moving along nicely. You can see the trend monitor here has transitioned to bright blue. We went to dark red and into bright blue. Didn't make the dark blue transition, didn't need to. The trend monitor had decided that this was a genuine move and therefore no requirement to change to the darker blue. Here you can see where we went the other way. We went from the bullish into the dark blue, into the dark red, and out the other side into bright red. That's the typical arrangement, and obviously vice versa if you're going the other way. But it doesn't always happen like that. You can see here we had a straight through here from red to blue. Didn't go through the transitional colors at all. This one went from blue into dark red, but no dark blue on the initial coming out of the bullish sentiment. So but it will transition and signal that change in sentiment and change in the trend. We're testing and retesting this on too. Maybe a little bit more difficult to get through that. It's quite strong. It's fractionally stronger than the one below. But the good news is if it does get through there on decent volume, and you can see the volume under that last candle, the market fell, but it was actually supported. There was buying coming in, so the market was looking to push this higher. Just coming up to retest it again. It tried it on that candle, but failed. See if it gets through on this one. Okay. Just bear with us a moment. Sorry, we just, Anna's got a call that she's got to take, I think at 4 o'clock. Just bear with us a moment. I'm just going to give some details to Anna. Bear with us a moment. I haven't gone away. Sorry, I'm back with you. I think I'm going to have to wrap this up because we do need to make a conference call on the machine I'm using at the moment. So let me just double check with Anna. Yep. Yep. Just testing that one. Still there. And what's interesting, you go to the 5-minute and you can see the volume point of control there has dropped. So what's interesting about that is we've got quite decent support possibly in place here, and we've now got the volume point of control below as well. So, you know, this is looking very positive. You can see the change in the trend monitor here. We've gone to blue. It hasn't transitioned here yet, but it will do if this continues, and down onto the 10-minute, and here we are down onto the slower time frames. What's interesting about the 30-minute, we've now got volatility come in on that particular candle. So we're outside the average true range, and that is a warning signal that we need to pay attention, because whilst this has been a nice trend higher, there is certainly volatility on the slower time frames, and that may well impact what actually develops thereafter in terms of the trend. So we just have to be conscious of that and keep an eye on it. Right, I'm going to have to wrap up there and run. Thank you so much for coming along today. It's much appreciated. If you do have any questions, you can always drop them to annacooling.com or david@quantumtrading.com. We will be back with you next week. All 3 webinars are on the Thursday, so we look forward to seeing you then. Hope you've enjoyed today. Thanks very much for coming along, and see you again soon, and bye for now.